A lot of people that came into this space were coming in for that quick benefit of salary increments, take some piece of that pie that seemed to be growing. We're seeing some of those startups not be able to sustain themselves. The majority of the capital that has been invested since 2018 has been from international funds. Ease of doing business in Pakistan is not really there. International investors get discouraged. We need to see more testing of possible localized solutions in these spaces, and that testing requires risk capital. Assalamu alaikum. I'm Rabeel Warraich, and I'm the founder and CEO of Sarmayacar, which is an early stage venture capital fund focused on Pakistan, set up back in 2018, and which has amongst its anchor investors the IFC, the International Finance Corporation. So this asset class venture capital is effectively capital that is provided to startups to test out certain business models, and so it's effectively risk capital. What we saw was an increase in this risk capital coming into Pakistan and being invested in these startups at a very quick pace. So we effectively had the first fund in 2018, and in 2021, 2022, we hit $350 million each. What that was a result of was too much capital coming into some startups too quickly, and the testing of the business model with the market resulted in money being thrown at the problem to capture market share effectively at the beginning. That did not coincide with the talent getting groomed or trained at the same pace. A lot of people that came into this space were coming in for that quick benefit of salary increments, take some piece of that pie that seemed to be growing, but it was not necessarily driven by fundamentals where we were discovering and testing out new business models that could be sustained on a profitable basis. So now what you're seeing is that now that risk capital has pulled back because capital is more expensive, international investors have their own problems in their own backyards rather than spending that risk capital in Pakistan, we're seeing some of those startups not be able to sustain themselves. Initially, when one startup is spending money, they're looking to capture market share or take it away from what is considered the more retail side of the same opportunity or that same consumption. And we are now left with a situation where there's lower disposable income because of the inflation that people in Pakistan are facing, and the requirement to generate return on that capital is higher because it's higher interest rate environment. And so you have some factors coinciding, which is leading to startups facing difficulty in being able to survive, in being able to elongate their runways, in being able to service the same volume with the kind of capital that they were. Effectively, at the beginning, each one of these startups is making a loss at an overall level, but the unit economics need to be positive. And but if you're losing money in some cases on each order or each booking that's processed, and as you continue to grow, that gap only gets wider. And so we saw some of that and led to a couple of, unfortunately, bigger name failures in the country. And we are also reeling from some of the impact from that as well. So one of the things that the ecosystem has not benefited from, as some of the other ones that I mentioned previously have, is the unlocking of local capital that is required to sustain any ecosystem. We've seen a number of international investors, and by quantum of capital, majority of the capital that has been invested since 2018 has been from international funds. We have seen some participation from bigger conglomerates and family offices in the country, but what we don't have are the government institutions able to participate. State Life, for example, or other pension funds in the country, they don't have allocation to this asset class venture capital. They also, in very rare cases, have any allocation to private equity as well. And that has been the key difference, for example, when we compare ourselves to Indonesia, where such state-owned entities or even non-state entities that have big assets under management are able to take on the kind of risk that venture capital asset class offers, because it can also offer outsized returns. That hasn't happened in Pakistan, and I believe is very important and crucial in seeing our ecosystem be able to sustain and generate the kind of influx that is available. This is money that is available in the country that should be coming into the sector, which it hasn't yet so far. So that's been one of the things that has been holding the ecosystem back a little bit as well. I believe the new startup fund from the government is intended with the right intentions. But as is the case with such interventions, which I would call it, the execution is what's going to determine whether it's useful or not. There have been successful examples around the world of governments intervening in the space and facilitating further flow of capital or helping with taking some of the risk away from venture capitalists. While something similar was intended with this fund, the setup and design of it is a little bit different. And in general, my opinion around this is that the government and authorities, other than setting the regulation, other than working on brand Pakistan, facilitating ease of doing business, should generally stay out. And in no case should the government be investing directly into startups and taking equity stakes, which this fund has correctly not tried to do. But my general opinion on this is they very seldom work unless they're designed similar to how the Yozma program was designed in the 1990s, or other examples exist around the world where risk sharing is facilitated in some way. So I will hold my judgment until this is implemented, but initially I'm a little bit skeptical on how effectively this can be executed. It's unfortunate that we still have to talk about such blanket bans in the country, because the impact is both immediate and direct to startups that are servicing certain industries, that are offering certain products, because their business gets impacted. So to give one example, one of our portfolio companies requires on their riders having internet connectivity to be able to pick up customers from one point or to deliver items to another point. They could not operate on a day, and in fact the irony is, on a day like the elections day, when that service could have been very beneficial in getting people to their polling stations, the blanket ban effectively didn't allow them to do that. So there's that immediate impact where there's loss of revenue, loss of whatever products, the bookings, the transactions that they have. But there's also a longer term impact, which is more sustained then, which is that ease of doing business in Pakistan is not really there. International investors get discouraged. International media platforms highlight this, and brand Pakistan takes a beating. We continue to highlight that there's a perception reality gap between the opportunity in Pakistan and what it's perceived to be. Unfortunately, measures like this only make that situation worse, and it's not helpful in any way. And certainly the longer term impacts of that brand Pakistan not getting improved, that's a much bigger impact than what any one day or a couple of days of business loss could be. Yeah, so as we look forward, there are certain areas that we're seeing a lot of investor interest in, and one of those areas is climate financing, for example. And the reasons are clear. Pakistan is one of the most adversely affected countries. Climate change, not just rising temperatures, but also extreme climatic events. We saw the floods, we know of the smog issue. But even when you look at the industrial level and go down, water treatment in our textile industry, in our cement industry is at a level where it can start impacting their business down the line. Purchasers out of Europe, out of the Americas, are increasingly asking questions around supply chain for these manufacturers, water treatment, and so we need to see more testing of possible localized solutions in these spaces, and that testing requires risk capital. And so while there's a big demand-supply imbalance right now in that space, we see an opportunity moving forward, which the government and the authorities would be well placed to try to incentivize and to try to put frameworks around. Again, not get involved in funding those projects or those companies directly, unless they are of an infrastructure nature, but try to facilitate investors that are trying to take exposure in those spaces, to try to get the learnings and get local entrepreneurs to take up these problems, because we can't have reliance on international solutions or international funding coming in to back these types of opportunities, and to learn the lessons that we as an ecosystem need to learn.